April's coming. Tax day is going to be here before you know it. But as of October the 1st of last year, the IRS has increased the amount of interest charged on tax underpayments.
WAFF 48's Sean Dowling sat down with Jay McGowan from the Welch Group to discuss the rising rates and what you need to be on the lookout for.
If you didn't pay enough tax when you paid quarterly estimated tax payments, be prepared to pay even more. I'm here with Jay McGowan with the Welch Group to talk about the tax underpayment changes. Jay, what's different this time around?
Yeah, so with interest rates going up in the economy, just in general to combat inflation, the IRS has also increased their interest rates they will charge you on tax underpayment. So it's now currently about 8%. This time 2 years ago it was at 3%.
Wow.
So people really need to know, like, hey, so basically if you underpay your taxes throughout the year, the government is going to charge you interest on those underpayments. Let's say you get to your April 15th and it's time to pay your taxes and you owe. Well, not only if you owe because you underpaid, well, now you have significant amounts of increased interest, so that can cause a cash flow issue for a lot of people. It can be pretty significant. I mean, a 5% increase is pretty substantial for a lot of people.
Yeah. Now, what other things do you have to pay attention to? I know you talked about side hustles before.
So for people, though, that are self-employed, maybe you have a side hustle, people that have a lot of investments that are throwing off dividends and interest that don't have any withholdings associated with them, those are the people that really need to pay attention to am I paying enough in, because it's your responsibility to cover the taxes throughout the year for those sources of income. Pensions, required minimum distributions. A lot of times you can set those up to have withholdings come out that would cover those taxes owed, but not everybody does that.
Okay, let's talk about ways to avoid tax underpayment.
Yeah, so the big thing with this is going to be, so the IRS actually has a really good withholding calculator. So you can go in there, put in all of your information, here's how much I make in salary, here's my estimated dividends, interest, all this, whatever your whole tax situation, you put it in there, and they will actually help you fill out your W-4 form or tell you how much you should pay in quarterly estimates. Now, the big consideration with this is make sure you hit the safe harbor. So what is a safe harbor? So basically the IRS says that if you hit 90% of your current year tax liability in payments throughout the year, or 100 to 110% of last year's tax liability, then even if you underpay, you won't owe penalties and interest on that underpayment.
We're glad you're here to break it all down for us. Jay McGowan from the Welch Group. Thanks.
Thank you, sir.
Valuable information right there. And for more ways you can stay financially savvy, visit our website at WAFF.com.